Good evening, ladies and gentlemen. John Kelly for Options University on Friday, December 2nd, 2011. The disclaimer: trading has been and always will be risky. Learn what you can here at Options University to give you that competitive edge. Well, this was a very historic week. Worldwide quantitative easing. The Fed, the ECB, the Bank of England, Swiss National Bank, the Bank of Japan reached a coordinated agreement for reserve requirement easing through February of 2013. China kicked it off on Wednesday morning by lowering their requirements, and the announcement sparked a 500-point rally in the market. However, the next couple of days have been anything but a rally. There is a lot of rumbling going on in Europe. Mr. Sarkozy and Ms. Merkel are going to have a meeting on Monday to discuss how to deal with the meeting of all the ECB leaders on the 9th of December. The concern over what's happening in Europe, even with the coordinated quantitative easing, has required Secretary Geithner to go to Europe today for the weekend for meetings with all the finance ministers of all the relevant countries. The ECB head Draghi wants a new order with more financial control and acceptance of the monetization of euro sovereign debt. Merkel and the Germans are against this. They want changes to the treaties ratified by all 17 member countries. A top China finance minister said no to a European bailout by China. The IMF is to meet on Monday to consider Greece's request for a 75% haircut of its private debt from the international banks as opposed to the 50% they initially agreed upon. United Kingdom's Prime Minister David Cameron says he will block any changes to the European Union, and France is facing a downgrading of its AAA rating by Fitch, Moody's, and the S&P, and even with the quantitative easing, France will probably have to nationalize their private banks. Non-farm payroll came in today at 120,000. They expect 125,000. That's neither here nor there. The big surprise was the unemployment rate. It was 9% and had been hovering there for 2.5 years. The number came in at 8.6%, the lowest in 2.5 years, and the market rallied very quickly, 100 points. Prior months have shown an average of 300,000 new job applicants every month. This month didn't show not only no rise in new unemployeds, or zero, but 300,000 fewer people looking for jobs, which, when you factor that in, is what caused the unemployment rate to drop to 8.6. I mean, the initial reaction by the market was, wow, isn't that great? But you start looking at the selected unemployment rates based on demographics, and you see that it's not all that good. Plus, you see also from this chart, since World War II, the recovery rates to full employment during the previous recessions was rather quick. This is prolonged, and on current projections could take as long as till May of 2016. So add that to the increased weekly jobless claims that happened on Thursday morning, where we got back up above the 400,000 number, and the ISM number, which came in a little bit better than expected. What we saw in the market was, of course, on Wednesday with that announcement, this huge rally, which, with the increased volume above average, was that the hedge funds coming off the sidelines finally, or was that a short covering rally where various shorts were forced to cover their positions, which added to the upward fuel to the fire, only to be met with all the problems in Europe and with the questions of jobless claims, as opposed to what happened on Friday, where we got that initial pop, got up to the 200-day moving average here in purple, and then once the details of the non-farm payroll became apparent, we retreated from that and ended up flat over the last 2 days, or are we simply consolidating this huge move up? With all the news that's going to happen in Europe next week, I think everybody's going to keep a watchful eye and keep their powder dry for now. The VIX also finally retreated, but touched its 200-day moving average and, of course, moved in the opposite direction to finish sideways in what I would call a holding action. Stock earning news, Alta Salons beat and raised guidance with a pocket pivot. We'll look at that in the gold member section later. Lululemon was a beat. Initially went down, but recovered by close on Friday. Other beats, Green Mountain Coffee Roaster was upgraded to an outperform. Has it bottomed? Is it going to go up from here? Big Lots and Guest stores were in a miss and lower, and RIM lowered guidance, just about killing any chances it had of a stock market rally for RIM. What are we going to look at and how to trade this market? We're going to take a look at Apple and gold in light of the quantitative easing, which is printing out of thin air of money and credit. How does that affect gold? And we're going to take a look at Google. There's a surprise there, and of course Alta in the gold member section next.